Hello, welcome, and thank you for joining our webinar today. My name is Ian Lloyd, and I work for an independent firm of financial advisors specialising in advice to businesses and company directors. I'll be presenting today on two areas that we see as common risks to businesses. Firstly, protecting the key people within your business, and then secondly, protecting the shareholders within your business as well. The presentation should last about 10 minutes. So, as I've said, the two areas, first of all, is to protect the business in terms of anything happening to a particular key individual within your business, and I'm sure most of you know who those are, but I will, as we go through, I will give you some ideas of what sort of areas that might cover. And then also protecting individuals in terms of succession plans for your businesses if anything should happen to sort of key shareholders in the future. The first slide that you'll see on the screen now is just a bit of background and a bit of statistics really in terms of what the chances are of you losing a key person. So in the UK, 1 in 3 people develop cancer in their lives and 1 in 4 people die from it. Around 1 in 5 men and 1 in 6 men will die from coronary heart disease, and someone has a heart attack in the UK every 2 minutes and a stroke every 5 minutes. So they don't make very good reading, but it really is just to sort of drive home and highlight the need to consider this type of protection. What are the chances of losing a key person within your business? Well, between the age of 30 and 65, there's a 30 to 1 chance of losing somebody through the death of a key person. There's a 7 to 1 chance of a key person within your business being diagnosed with a defined critical illness. A 3 to 1 chance that somebody within the business, a key person again, would need to claim at least once from an income protection plan. And one of the above, which is the figure that really sort of drives this home, is that there's a 2 to 1 chance of a key person within your business between those ages of 30 and 65 suffering from or claiming on one of the above. If we look at the risks to your business, the risks of losing a key person, obviously if it can create a great deal of pressure on remaining employees. It can cause problems if you've got contractual obligations that particular key person was key to meeting. The obvious drop in turnover, possibly drop in profit, drop in sales. It could be growth plans or particular plans that are in place that person was key for have to be put on hold or are lost altogether. There could be a loss in customer confidence or client confidence if that was somebody that a lot of your clients dealt with and knew very well. Could affect your credit status with the banks. It could affect liquidation. You could see a fall in your share value, fall in the market share. There could be a general loss of staff confidence or an inability to pay loans. So obviously those are some, I'm sure you can add others to it, of the risks to your business of losing a key person. Protecting the business in terms of some of the things to consider. Would the company survive if one or more of the directors or the key individuals were no longer around? Would there be any impact on turnover? There may not be, but obviously in a lot of cases with key people, they are responsible for a certain amount of the turnover within the business. How long would the company survive without that key person or without that key person being replaced? Next question there, as you can see, would the company need to recruit a replacement? Or could others within the company cover their work? If somebody needs to be replaced, what amount of money would the company need to replace that person, and how quickly would the company need the money? And again, how long would they need that money for? But it's important when you're looking at key people that you understand within your own business who those key people are. And obviously from our perspective, it's not our role here to tell you who they are, but just to give you a guide on maybe identifying who those are. I'm sure a lot of you will know who they are already. So the first thing to do is obviously identify them. And some of the things that we normally look for are, do they have a direct effect on the turnover or profit of the business? Have they got business contacts that are vital to the company? Okay, so they built up obviously very strong relationships with with certain contractors that you do business with? Do they carry out a vital sales function that maybe can't be carried out by anybody else? It's a specialised role. Are they playing a pivotal role in a major product? And would they have a bearing on the credit rating of the business with the bank or other investors if they were no longer there? Once you've got all those things, once you've identified the key people, once you've got an understanding of what it is that you're looking to try and do, what we then need to sit down with you, and this is where we really sort of help, is to sort of calculate what sort of level of cover that you would need, both in the short term and the long term, to protect the business against the loss of any particular key person. So that's looking at key people within the business. The next sort of area I just want to cover briefly is to go over protecting the individuals within the business. So what this is really dealing with is, with most businesses there will be shareholders, okay, within the business, and this is really looking at what happens if something happens to one of those shareholders as far as the business is concerned. So what I've tried to do here is just create a couple of examples. Obviously you recognise the names, I hope, depending on your age. But if you look at this particular example here, you've got a company called Equal Shares Limited, where you've got two owners, well, two joint owners. You've got George and Mildred who own 50%, and you've got Terry and June who own 50%. In this particular instance, Terry has died, and what we're looking at is what impact does that have on the business. So what you will then see is George and Mildred still own 50% of the business, but June would then own 50% of the business as well. Now it may be that Terry was the main involvement with the business, and that June doesn't want those shares. George and Mildred may then think, okay, well that's fine, but we can't afford the shares, we can't borrow the money to buy those shares. June might then say, well okay, if you can't afford to buy them and you can't afford to borrow the money, obviously I want to realise their value, I might sell the shares to someone else. And the issue there and the conclusion from that is that June is left with shares and maybe not interested in getting involved with the business. She'll still be getting the dividends though, because she's still a 50% shareholder. George may be running the company and doing all of the work. George may feel that why should he be giving profit away to June when she's not really involved in the day-to-day running of the business. As a 50% shareholder, June could vote against any further borrowing, pay rises, bonuses, etc. She could also sell the shares to someone else. However, someone else might not be prepared to pay the valuation that you feel that they're worth, or that June feels that they're worth. She could also sell the shares to a competitor, and somebody else could then come on the board or come into the business, and it's how George and Mildred would feel about that. Another example is where we haven't got equal shares split, so this is unequal shares limited. You've got George and Mildred who own 60% of the business, and Terry and June own 40% of the business. Again, something happens to Terry, Terry passes away, so you're now left with a situation where George and Mildred are still major shareholders with 60% of the business, and June is a minor shareholder with only 40% of the business. Again, June may not be in a situation where she doesn't want the shares, she doesn't want to be involved in the business, so she's looking to try and offload those shares, to sell those shares. In this particular instance, George and Mildred might think, well, we've already got a major shareholding within the business, so we don't particularly want those shares. So the conclusion there is June is left with the shares. She's got no interest in getting involved with the business. She'll still get some dividends. George could vote against those dividends, being a major shareholder, and she could find it hard to find a true buyer. Another example, again unequal shares limited with the same shareholdings. George and Mildred own 60%, Terry and June own 40%, but in this instance it's George that passes away, so Mildred is left within the business. She's a major shareholder with 60% of the shares, with Terry and June owning 40%. Again, we're assuming that Mildred doesn't want to be involved in the business, so she doesn't want the shares. Terry and June are now in a situation where Mildred is looking to sell, but the business or they may not have the funds available to be able to buy those shares. So you're again left with a situation where you've got a major shareholder in the business who doesn't particularly want the shares or wants to be involved. Terry and June may not be able to raise the funds to buy those shares. That may mean then that Mildred is left in a situation where she has to sell to a competitor. Again, obviously, how would Terry and June feel about this? So from our perspective, obviously what we've tried to highlight there is some of the issues that arise from either the loss of key staff within the business or the death of a major shareholder or a major shareholder contracting some form of critical illness within the business. And from our perspective as professional advisors and obviously a company who are very active in this market, what we offer all of our clients, all of our corporate clients, is the option to go through what we call a professional contingency planning audit, which helps to identify some of these risks, some of these key people, and ensures that the right money is going to the right people at the right time to ensure the business is protected against the loss of these key staff. I hope you found that useful. Any questions you may have, you can either email or contact me on the numbers below, or obviously we can take further questions at the end of this presentation. Thank you.